Hey traders, Park here with another indicator. Today I'll be introducing you to the RSI sector Powerboard rotation indicator. What it is, it takes all the sectors in those indexes and it takes all the RSIs. It takes the offensive sectors, or what's considered the offensive sectors, and the defensive sectors, and it gives you a risk analysis as well. And it gives you the spread. Right now we're risk off because using the RSI for those positive sectors, you get 41.60, and the negative ones are 54.50. And the spread is negative 12.90. So right now we're risk off in the market, and if you've seen any of the recent price action, you can see why. And you can look right here with the S&P 500 really just round trip back down to this level and found support. But for the most part, it's just a RSI for all those different excuse me, for those groups, and then it gives you a ranking system as well. So it ranks which ones are the strongest. So you have your ranking system with number ones right now is healthcare. You have staples coming in a second, and you have, where's number two? I mean, you have, I was looking for number three, but you got energy as number three right now on the RSI metric, on the RSI board. We have a breadth indicator down here, and we have our average of the risk on, risk off regimen right here. And then you have the actual risk off regimen as well. I mean, the spread right here as well. That's what these bubbles indicate right here. For me, I kind of use them as to help me know when the S&P 500 is rotating stocks, and when there's strength in the market, when there's not strength in the market. And you can see here's our sell off for April 7th right here. You can see the RSI was already showing negative. I can't show that in the bubbles, but what I can do is show it here. Here, maybe I can. Let me see if the on-demand feature is going to work in the ThinkorSwim platform. So let's see what on demand shows us for that same time period. I'm just waiting for it to populate. And you can see the breadth across the board is all great. Everything is below 50, but you can see right here the risk off and risk on is still showing you risk on during this time period, especially after this huge move up. So we could change it to a couple of days in the future, but we can see that the 50, this blue line represents 50, this red line represents the 200. And we can see that it's about to cross over. So let's push it forward to the following week on the 16th for the same time period. And you can see we have risk off for that time period. But I'm not sure why these labels are not working for the on demand, but they work as you can see, as you've seen for the regular time periods. And you can see where the labels themselves have shifted, the ranks have shifted because of the volatility in the market. And for that time period, staples was leading, utilities was number two, and real estate was number three on an RSI basis. But we're going to push it back to the regular time period, and we can see we have risk off. In the labels, you have the actual tickers. So I'm using the futures for the tickers for the indexes. So you have the Russell, I think that's the Russell 2000. You have the Dow, the Nasdaq, and the S&P 500. I put the TLT. I believe that's the 10-year interest rates, not interest rate, but 10-year, I cannot remember. That's basically what it is. Then you have Bitcoin. I'm using futures, gold futures, and then we go into the dasher sectors. So this is give you a great indication of what's going on in the market based off the RSI indicator. So if I were to go to XLV, right now it's showing it's way overbought. All I did was just add the regular RSI indicator here, and you can see that it's showing it's overbought. It's showing you the same reading as well, 70.90 there, And with this information, what I would normally do is this. I would, let me take this off. Once you really got this reading that, let me put RSI back on there. I shouldn't have taken it. One of the things I like to do once I've done this is to go to the scanner. But before I go to the scanner, I want to give you a better picture of the actual indicator. So I'm going to overlap. And you can see RSI. So RSI, I should have put my RSI with 50 on here. This is RSI with the 50. You can see healthcare crossed above 50 here, and it crossed above 50 here, and it remained. It dipped right here, but it kept pushing up, and you can see with the RSI 50, it has its overbought leg setting right there. But I'm going to take that off, and I wanted to show you the entire indicator here. So this is what the entire indicator looks like, and that's why I said here's your ranking system. Here's the labels will change color. So if something's oversold, it'll be yellow. If it's overbought, it'll be pink. If it's above 50 but below overbought, it'll be green. But if it's below 50 but above oversold, it'll be gray. So one of the things I like to do is go hit the scanner. So if I'm looking at this and I see healthcare is on top, then I'm going to go and hit the scanner. And this is another scan app. Let me take all this stuff out because this is all pre-market. And this is, I'm intersecting my scan with the healthcare scan. I'm looking for stocks that are above $3. Really prefer $10. But anyway, with a million volume on that day, and the 50 has to be a grade above the 200. But I'm looking in healthcare, and I'll go. I have my market diff indicator. I have it sorting everything by market diff, and the market diff that I'm using is a percent change ratio. So it's really percent change. So, and the market difference I'm looking at is the S&P 500. So I'm searching. Normally I change that to the healthcare, and basically I'm using William O'Neill's stocks, what are leading, what are lagging, and basically it's can slam method. If you're unfamiliar with that, just Google or YouTube William O'Neill can slam. So you want to stay away from your laggers in that sector. You want to push towards your leaders in that sector. So normally, because I don't have this stuff loaded up, I'm not going to try and go get it. I would do exactly what I'm doing. Intersecting with healthcare, I'll look for them instead of market diff. I have my healthcare diff right here, and I'll look for anything that in the healthcare sector that's outperforming the XLV, the actual sector for the healthcare. And I go to those different stocks. And this is my standard deviation volume. I think I have it set for I can't remember what I have it set for. I think it's 42 day or 20 day. But that's basically it. But that I would use that to go search these different sectors for the leaders of those sectors. ADP is not a leader. ADPT, what's that it? So isn't it's in the healthcare sector. So let's go look at it. Let me pull this back down and let's see where it's above. So it's been one of the ones that's been trending up, even more so than the healthcare, the XLV itself. So it's an outperformer. It's been outperforming the XLV. So that's basically the indicator, but that's basically how I use it. I'm looking for RSIs. If you're a big proponent of RSI, then this would be a great indicator for you when determining what stocks you want to go look for, what sectors you want to look for those stocks in. But this is going to be the end of the video. If you want this indicated, look in the link in the description of the video. If you haven't already, please like and subscribe, and leave me some comments or feedback so what you think and possible things I could change. I appreciate you guys taking the time out to listen to what I had to say. I wish you the best, and God bless.